Okay, so we've talked about gains. Now, what about losses? What kind of tax breaks, I guess you could say, from NFT losses can you write out?
So there's two, we'll say, columns, and you can have active income and active losses, and then you can have passive income and passive losses. So at this level, with the amount of money that I've been buying at and how much we've been buying, we can actually label this active. So active income or active losses can go against active income and active losses. If it's passive income and passive losses, it could only go against passive income and passive losses. So let's just say you're gonna talk about passive. You are doing this on the side, you made $10,000 through collectibles or lost $10,000 through collectibles. You can write off some of those losses against your earned income. So let's just say right here, you bought $10,000 worth of NFTs. You ended up selling them for, you bought some crappy ones on OpenSea and they're not worth anything now. And you sold them for $1,000. You have a $9,000 loss. Because it's a passive loss, if you don't have any other passive gains in other investments that you have, that passive loss, you can only take $3,000 a year against your earned income or your active income. So that means it would take you 3 years to take that full loss on your tax return. Now let's just say you sold another NFT and you made $12,000 of profit on that other NFT sale. Well then, because it's also passive, the $12,000 gain would be reduced by the $9,000 loss, which would have you a net gain of $3,000 on your income taxes.
Okay, so maybe some of the viewers want to understand, how can you know what is active and then what is passive? Is there an amount of hours that you need to put in?
It's so in the sense of in the investing world, it's not specific to the amount of hours unless you're a real estate professional. It really comes down to how much money are you making elsewhere, right? So for example, let's just say you're a doctor. It's going to be a easier example, and you're making, a few $100,000 a year, and then you made $50,000 through NFT investing or loss. $50,000 loss is the IRS is never going to give you a problem about paying more taxes. They're only going to give you an issue if you're trying to pay less taxes. So the $50,000 loss, he can't, if he try to claim it as active. In an audit, the IRS agents would say that's not allowed because you're using a majority of your time as a doctor. This is not another majority activity. If you have the right accounting team, you could actually argue the point, and there's different ways that we can figure out how to resolve that issue. But generally speaking, they wouldn't let him take the $50,000 loss because they're going to call it as a passive activity. Side note, what would I do if I was his tax professional? I would have him in his medical practice. I would have his artwork displayed. So when it's displayed, it's obviously artwork. It is an asset to the company, and then I would have him depreciate the asset and then reduce his income that way. So and then if you sell it at a loss, you're allowed to do it that way. But as a personal ownership against earnings, it's a little bit different details. So you have to be kind of specific on how you want to do that.
Okay, so example, maybe future tense, let's say you're a business owner, you're a doctor, and you have a practice, and you have these NFTs. You can then display the NFTs, let's say, to augmented reality, and then you can then depreciate those over time if you need to. Right? Yes.
And obviously this is information specific to the physical asset space. So how they're gonna fully treat the digital asset space is still unforeseen. We really don't know how they're going to treat it. I'm leaning towards they're gonna.
Nick, it's the same.
They're going to treat it.
Collectible is just now it's digital. you
Yeah.
know?
Now, the argument could be, the IRS argument could be, well, this asset doesn't actually depreciate. It's digital. It doesn't get. When you depreciate something, what you're saying is this item is degrading over time. And because it's degrading over time, it's worth less. So we should be able to have the ability to depreciate it over time or immediately, depending on what the tax code says. In the digital space, it doesn't degrade, but in the physical space, it also doesn't degrade. So I believe there's going to be probably some type of argument where you're going to allow to have depreciation of physical assets
Up to a certain point, probably as a way to simulate like degradation.
Well, again, tax code doesn't always follow reality.
Right.
Because, for example, any of these items here, I can depreciate them immediately, year one, because they're called 5-year useful life items, so you can write them off all year one. And in a business space, you can have bonus depreciation, which you can write off 15-year items year one. So this desk, believe it or not, it's pretty expensive, but you can write.
Legit desk.
It is a legit desk. It's really awesome. But all this stuff, all year, they're up to 15-year life items. You can write it off all year one. Check with your tax professional on your individual circumstances. But the point is, this whole setup here was like $25,000. That's all year one write-offs, right? I don't have to take it over time. So, there's a lot of little things you can use that you can bring in to help your tax situation. And be conscious, because if you're not doing it properly, what ends up happening is it really hurts your opportunity for the future to, say, buy a home or expand your business. Because if you don't have your bookkeeping and taxes set up properly, it will look bad. You will make yourself look bad to the lenders, and it will make it harder for you to get loans to expand your business or to buy a home or whatever you're looking to do.